What is up, guys, and welcome to another edition of the Market Marauder Show. Beat the market one trade at a time. Welcome back. In this episode, going to be talking about some market crash deals. So if you've seen, the market is currently on a little bit of a bearish downward trend on the past couple of weeks. Especially like after the FOMC recap. So where Jerome Powell basically said in March they plan to raise interest rates, and so the market reacted to that, and it started to go down. You start to see a lot of people sell off, and then earnings season is up on us. So earnings season definitely has a large effect to that. Amazon recently just went up and shot up after having a great quarter, but then you also have companies like Facebook, which was Meta, who recorded losing customers for the first time ever in the company history. And then the stock went down about 23%. And so there's a lot of volatility going on, but there's volatility in the large market cap companies. And so every time that happens, there are going to be deals in the market. Especially considering that a lot of these are top in the S&P 500, it definitely affects the entire market as a whole. And so there's some deals that are out there to be made, and I'm going to be going over those in this, one of which is Google announced they're going to be having a split, which is a 20-for-1 split. So for every share you have of Google, you will get 20 shares, which will make it easier for people who are retail traders to jump into stocks like Google, which has a large price, I think around $2,900 a share last time I looked. But we'll go over that a little bit later. So in this episode, like I said, again, going to be talking about some of the deals that are going to be available in this market crash. This is a great time to build generational wealth, to stock up your portfolio, really build your base in investing. Market crashes are a great time if you have some cash on the side to stick it to the market, because after a bear run, there's always a bull run. All right, so first on here we have Google. So Google just recently announced that they're approving a 20-for-1 stock split. So that means for every share of Google that you have in your account, you will get 20 shares of Google. So I think this is a great deal as far as market crashes are concerned. I think it's a game changer for anybody with a stock portfolio. Now, Google is one of the main stocks that's in majority of people's 401k. It's in VOO, which is one of the largest, most successful ETFs that are out there. And so definitely, I think as an individual investor, this move will be a great move to build generational wealth and long-term income. And so, this move, I'm kind of looking similar to, if you remember last year, Tesla and Apple both did stock splits. Since then, both of the stocks have gone up tremendously from that. And so definitely going to be looking at Google. Google's price is around 2,900 per share. And so if you look at around Tesla when it did its 5-to-1 split, so for every share of Tesla that you had, you got 5 shares of Tesla, but it did its split. And before it did its split, it was around 2,000 share. Then it did its split, and now it's back up to 900. So you would have essentially gained more money by participating into the split, or buying shares before the split. Now you can buy shares of Google, and then it'll divvy out the whatever remaining percentages in shares that it gives you. So let's say you can afford a whole 2,900 share, which is one share. Then you could be able to get your hands on Alphabet or Google itself, and they'll distribute it that way. So that's one way. I know a lot of people are worried about, well, I can't afford 2,900 to get the whole 20 shares. If you're doing partial shares, they'll distribute the partial shares. They did the same thing that happened with Tesla. If you were able to buy portions of Tesla before the split, then they divvied out and gave you the residual, which was you may have had half a share of Tesla, so they gave you the remaining amount in shares of Tesla. But overall, it was a great strategic move to help grow your portfolio, and I think this is one of the main deals that is out in the market. Now, Google, being a very large company, one of the things you look for in investing is, has this company's model changed? Is there anything that has caused this company to change that would make the price go down? I don't think so. I think Google is a very revolutionary company. I think they're going to continue to grow. They're starting to make moves getting into the Web3 space, which I think will be one of the main talking points into 2022. So I think Google is definitely a great one, especially when it's on sale. Now, when it does its split, it'll be about $150 per share, which if you can afford the partial shares, if you don't want to do partial shares, you can always jump in at that cheaper price. But I think overall, Google is a great one to look at as far as market deals are concerned during this crash. Next, we have Microsoft, which announced that they were going to be buying Activision Blizzard for $68.7 billion. Now, Microsoft being one of the largest market cap companies out there in the stock market, buying Activision, which is also a publicly traded company, trading under ATVI. I think this is a huge deal for the company moving forward. Activision being famous for games like Overwatch, Diablo, the Call of Duty series, World of Warcraft, Candy Crush, and StarCraft. Kind of completes a trifecta of different gaming solutions. So Candy Crush being large on mobile, StarCraft and Worldcraft and World of Warcraft being popular on PC. Also Diablo being popular on PC as well, and then you have Overwatch and Call of Duty being popular on console. So I think this is a very good deal for them, in my personal opinion. I think the Call of Duty series alone is a really good series to just have under your belt. And this is also on the heels of the metaverse. So you have people talking about getting into the metaverse. What better way to do so than to buy a company that has a large studio behind it with already popular names? Getting into the metaverse, you're just essentially buying your way in by having all of those developers for assets to jump into the metaverse. So I think Microsoft trading under the ticker MSFT is definitely going to be one to look for. Now, you're not going to immediately see the effects of Microsoft gaining in popularity or gaining stock wise from this. It's not going to be a significant gain because this deal is still going through. Now, once they develop some things, I think around November timeframe, usually when games are released about September, November timeframe, you'll start to see a lot of these games being released with the studio behind it, which can ultimately help the company moving forward, help their bottom line, and then you're starting to see their earnings start to show the increase of profit that they're getting from all these different developments from Activision, Blizzard's help, and I think that's going to help Microsoft overall to solidify themselves as one of the media giants that are out there. Also, they have the corporate side, which is Teams, and a whole slew of other things that Microsoft owns. So I think this is a great deal for Microsoft and definitely one to look at for a long-term play, in my personal opinion. Next, we have Sony. So Sony bought Bungie for $3.6 billion. So the deal is to buy Bungie, which is famous for the Destiny brand as well as the Halo brand, which usually are Microsoft exclusives, but now are going to be on Sony. And so Sony already said that they're going to be keeping, the platform available so that multiple different platforms can use their software, which means they're not going to release games exclusively for Sony. They're going to flesh it out to multiple platforms, but I think still is a big move for Sony in general, and I think it's going to be good for them. So Sony is trading under the ticker SONY. I think that's also another deal during the market crash that could help Sony's baseline overall, and you could see their profits. Lastly on here, I want to talk about Amazon. So Amazon just recently had their earnings. Amazon being the company that does all majority of the e-commerce shipping that's out there, the largest e-commerce platform in the world. So they recorded that they're going to be raising the price of Prime. So Prime's going to be going up to 139 from 119, and this will also help get a lot more profits for them. And then they're also talking about tackling the pandemic and all the shipping issues that are going on. So Amazon is really focusing on the customer, which I think is a great thing for the company moving forward. This earnings report that they had was definitely a shocker for a lot of people, and I think the CEO Andy Jassy is really leading the company in the right direction as far as helping to fight inflation, helping to fight shortages, and some of the other issues that are persist with the pandemic. And so Amazon has always been a pretty expensive stock. It's still a pretty expensive stock. I don't think it's going to split anytime soon, but if it does, that'll be one to look at. And just getting partial shares of Amazon, I think, will be profitable as well in case they do a split in the future. But the way that they have strategized themselves to remain the number one e-commerce platform out there, I think it's going to continue to help them grow. And it seems like they have a good strategy moving forward to combat the pandemic as well as to gain profits for them and the company. So Amazon has a whole slew of different things they do. It's not just e-commerce, but e-commerce being one of the ways that they became popular or famous, essentially, in the world. And so definitely going to be looking at Amazon. So those are kind of four companies that I'm looking at for deals in the market. Hopefully that helped you point you in the right direction. Like I said, again, these are all publicly traded companies. Google trades under ticker sign GOOGL and GOOG. Microsoft is MSFT. You have Sony, which is SONY, and then Amazon, which is AMZN. All of these, I think, are going to be great picks and great ones to look at to build a solid base in your portfolio. Every time these go on sale, I try to get just a little bit of them just to build my base for my portfolio because I think these companies, nothing has fundamentally changed about them, just that sometimes they'll go on sale and sometimes they'll make big acquisitions, which you can see years down in years down from now. So hopefully that helped you all out. Just to point you in the right direction. Some of the deals that I'm personally seeing in the market, and I'll see you guys on the next one. Go out there about their investing. Peace.